Welcome, you're on the Fringe show. I'm your host, Tatiana Zalan, and I go live every Friday at 2 p.m. Dubai time. The Fringe is about our future, science, technology, art, economy, and society. I help you to navigate the rapidly changing world and uncertain future so that you too can take advantage of the opportunities and make better decisions. Today, I'm talking about the future of the publishing industry. Well, how come? Let me explain. Many Web3 or NFT projects are solutions in search of a problem. People are being sold buzzwords. That's at least according to Mudahar Anas, who is a gamer and a YouTuber with 3 million subscribers. And not only buzzwords, but sometimes they're scams, sold scams too. That's my personal take on it. But there are some solid projects that use Web3 technologies appropriately to solve a real problem. And one such project, in my opinion, is Book Token, and this is the focus of today's show. And the reason I'm talking about it, because it's one of the first, or maybe the first, according to the team behind this project. This is the first read-to-earn model which incentivizes reading and seeks to transform this license-based industry to a digital ownership model. So perhaps what I'm talking today is the future of the publishing industry. So if you're a creator, a retail investor, a Web3 startup founder, or simply someone who loves reading, then this show is for you. The usual disclaimer, the views on the show are my own. They do not reflect the official views of organizations or startups, employers I'm associated with. This is not investment advice. The Fringe show is for educational purposes only. And for full disclosure, I don't hold any book tokens, but maybe I will someday. Now I'm just looking at it because it's an interesting model. It's something new, and perhaps it is our future in the publishing industry. As with any new project, it's important to look at the opportunity first, and then we'll look at the team, at the market, and at founding and tokenomics and so on. So, starting with the publishing industry. The publishing industry is one of the oldest industries in the world, and some companies in the sector are hundreds of years old. And it's not surprising that many of these publishers still operate under centuries-old business models. One of the last technological innovation was Amazon and the Kindle, and that was launched in 2007. And since then, I don't think we had that many innovations in the digital reading publishing space. But generally, the pace of innovation has been really, really slow, as there are vested interests in continuing to centralize and control the publishing industry. The publishing industry today is an oligopoly. It's where 66% of the market is controlled by a handful of players, 5 of them to be precise. And additionally, ebooks have to adhere to what we call agency book pricing model, which is in fact, that means price fixing. If an ebook is for sale on the internet, then it has to be sold everywhere on the internet at the same price. Ebook sales surpass both hardcover and paperback sales. Many readers don't realize this, but that's a very important point. When you're buying an ebook, what are you actually buying? You're not buying the book. You're buying a license to reading the book. And once you're done, you can't sell the book. This is unlike the physical book where you can obviously go and sell it. Speaking about the opportunity, well, it's really the nexus of 2 trends that we're seeing today. Firstly, there are more and more cryptocurrency holders. At the moment, there are some 100 million of them around the world, and the adoption, as we think, is on the rise, with over 1.1 billion people buying a digital book in the next 12 months. Secondly, consumers, according to the team behind the project, will demand ownership of the digital content, especially if we see this movement towards metaverse products. I talk about metaverse a lot, and you can check out my previous shows. about the metaverse. So this will transform the license-based industry to a very new model, which is digital ownership model. The book token team describes this as a path to decentralized knowledge. They believe that education and books are key to enhancing society, but it's not if they're not sold just as a consumable product, never to be read. So they are also introducing with this project the world's first read-to-earn model. I couldn't verify this claim personally, but let's assume it is the very first read-to-earn model. So readers will earn a native cryptocurrency based on the amount of content that they read or listen to, and statistically societies with a high level of education, according to the book token team, have less crime rates and less violent crimes as well. So what we're seeing here is kind of a transition from one model, which is pay to read, we pay for our books, then to subsidize the free reading, which is libraries and public education, and now to read to earn. And we believe that incentivizing reading will radically shift this society for the better. And with the invention of blockchain and Web3 technologies like NFTs, non-fungible tokens, we now have the ability to create an individual digital object and reinvent the whole model of pay to read. We call this, and the book token team calls it, a third generation of utility-based NFTs, which is decentralized encrypted assets, or DEA. This is revolutionary because it enables true ownership of digital books and media, and not showing at the same time the contents of the NFT publicly on the blockchain. Now, the book token is a multi-sided platform, and there are at least 3 or 4 user groups that will derive significant benefits from the new model. So let's look at that. What are the readers going to benefit from? Well, the readers will be able to see a real-time value of all the digital books they own. They can sell back their ebooks or audiobooks. It doesn't just apply to ebooks, could be audio as well. So they can sell it back to an open marketplace. They can earn cryptocurrency based on reading or listening progress. They can share or transfer a digital book, much like physical books. They're also planning for multi-language support and combined audio. And NFT places, including eBay, are rapidly expanding. And that means that they will become commonplace at some point in time, and readers will have multiple places where they can resell their purchases. The readers will also be able to exchange the book token for other cryptocurrencies on decentralized exchanges. And that could change the education system with verified reading and ongoing historical record, because everything is on blockchain. Now, I mentioned at the beginning that, to me at least, it seems like they're solving a real-world problem for creators and authors. So if you're a creator and author, you probably need to be paying attention. Over the years, authors have been trying to navigate this shift into a digital-first ecosystem. Digital books, unfortunately, have zero quantity control. Book advances and author royalties have gone really down steadily over the years, even though the production costs of ebooks have reduced the cost of distribution exponentially. But that hasn't been passed on to the authors. Authors receive zero information about who is purchasing their books, and unless they create their own social media following organically, they have no way of communicating with their audiences. Plus, there are no resale royalties for second-hand sales of physical books. Authors' IP continue to be sold over and over again, but they receive nothing for it. So if you're an author who wants to publish independently, then the terms of that sale would be more lucrative. But then you, as an author, must invest into your own PR and marketing and distribution infrastructure. And that can be quite costly. This is what big platforms like Amazon are doing for you. So what's the solution that the book token team is suggesting. Firstly, authors need better terms and better incentives. Amazon is squeezing out the margins for the authors. Authors should be allowed one-on-one contact with the reading audiences, and they deserve access to a suite of marketing tools and completely transparent data. Authors should receive high splits as well as residuals on the resale of the books in perpetuity, and they should have the ability to create releases and collectibles just like any other digital media. For publishers, there are also benefits. So they will have the ability to get paid via smart contracts on all sales, including secondhand. And this opens up new revenue streams in perpetuity with security of digital rights management, and that will prevent digital counterfeiting. There will also be a possibility for publishers to transfer digital rights. If we look at Amazon royalties and how they compare to book token, well, judge for yourself. At the moment, Amazon charges 35% royalty on all sales, or their commission is really 65% for books priced below $2.99 and above $9.99, and authors can have 70% royalty. In that case, the Amazon sales commission is 30% for books priced between $2.99 and $9.99. With a book token, the authors will receive 70% of all revenue on the initial sale of the books. You'll set the royalty percentage that you will receive on all secondary sale. It's up to you, and you won't have to be exclusive to the project, to the book token project. You can sell in other places as well, which is very beneficial, I think. For education and businesses, there's also a bonus here. Universities and schools can verify exactly how much content a particular student or employee read, and a record of these activities could be stored on the blockchain forever. You can own digital books and learning materials that never decay and can easily be transferred from one student to another. You can buy in bulk from publishers, and authors can reduce their shipping costs in that case. And as a university professor, I can really completely understand this problem. And we do have problem of not being able to pass on ownership of digital books. Now, that's the opportunity, that's user benefits. What about the team? When you look at the team, it's very different from what you see with many Web3 NFT startups. The book token team previously created and sold an ebook platform and distribution company, which had over 6 million registered users. So they're definitely not novices, and they've been there before. The team itself was featured multiple times in technology publication. They led the way in creating the most innovative reading experience. And many components of which were emulated by some of the centralized retailers, according to the team. It became the world's largest bulk ebook distributor with enterprise partners, which included the likes of Wall Street Journal and Intel, T-Mobile, Apple, Microsoft, Google, General Mills, over 50 universities, including Stanford, and hundreds of other entities. So they have a very much unique end-to-end digital publishing experience. The two co-founders, who are probably the core of the team, one is Joshua Stone, the CEO. He has over 25 years of experience in tech, from startups to enterprises, and the background of another co-founder and chief growth officer, Ben Ilian, is also very illustrious. He's a natural entrepreneur and has been drawn to startups and tech since 2004. So he's led teams as VP of marketing and sales and product ownership, social media manager, and chief growth officer, and so on. So a very different team from everybody else in most startups in Web3. Now, what about technology? Is it appropriate? Do we really need blockchain? Do we really need smart contracts? It's Web3, blockchain, smart contracts, decentralized storage, encryption. They're able to leverage proof of stake, open source technology, and that makes NFT books possible. Gas fees are very low, much lower than with the very similar proof of work models. And this is because they built their project on the Cardano platform. Cardano is one of the leading proof of stake blockchains, and they claim at least that the Cardano team, have more developers contributing to open source platforms than any other blockchain. Additionally, there's a massive advantage when compared to other blockchain ecosystems. And this is because Cardano is set out to develop a code base that's more easily accessible to all developers worldwide. Its primary smart contract language that they're using to program is written in Haskell, and that's a leading functional programming language. So the technology is there. It seems to be appropriate. Now let's have a look at the tokenomics. They call them token, and it's a utility token book that will be sold privately and in multiple rounds and publicly as an initial exchange offer. So people, retail investors can get access to that as well. They minted their tokens, created 10 billion tokens, book tokens, in 2021, and this is they were minted as native-based Cardano tokens, and this is the total supply, and it will never be changed. So the distribution is very important. So let's look at the distribution. So the total fixed supply is 10 billion tokens. How are they distributed? For reader rewards, it's 30% or 3 billion. For fundraising, they allocate 25% or 2.5 billion. For team and acquisitions, some 30%, 3 billion again, and some of it is reserved for future platform development, 1.5 billion or 15%. So they think that having a native token or utility token rather has a multiple benefits, and the main one is that they're rewarding users for reading books, and they're calling this reader mining or knowledge mining. And we can also buy new books, although it's not mandatory, because we can with the book token, because fiat currencies and other cryptocurrencies are also part of their platform. It's an accepted form of payment, and you can pay transfer fees and book royalties within the ecosystems to publishers, authors, and the book token platform for operating costs. Now, what about funding? So that's tokenomics. What about funding? The book token project funding is actually revenue generating. The project is revenue generating at the moment. And within 60 days of launching this blockchain utility platform and the e-reader app, they generated over 250,000 in net sales revenues, and that continues to grow and generate daily royalties from secondary market sales. In early October 2022, so that's just been maybe a week ago, not even a week ago. Today we're 7th of October. They, one of the leaders in the space in the publishing industry, called Ingram Content Group, closed a seed round with Book.io, and that's one of the leading world's distributors. They have expansive reach outside the world of book publishing. They have access to tens of thousands of publishers and millions of titles. Ingram's print-on-demand service, Lighting Source, will enable ebook to bundle NFT ebooks with bespoke printed physical books based on whether you own an NFT or not. These printed books will be delivered within 48 hours anywhere in the world. So the NFT can be linked to the physical book itself, and physical book can be sent out. And according to Crunchbase, which is one of the big platforms, aggregator of everything that's going on in the venture capital industry and fundraising as well, they raised 500K, so $500,000. By today's standards, it's very modest, and that's probably a very good thing, because these days startups, even in the seed round, they tend to raise millions of dollars. Well, now, in summary, what do you think about this project? Is Book Token or Book.io a solid project from a retail investor point of view? It is a larger opportunity. It can be quite disruptive for the publishing industry, and that's probably very good news for us as, if you're a creator. It is an innovative business model, I believe, ready to earn, allegedly first in the industry. Yes, I believe they are solving a genuine problem. It's not technology in search of a problem. Yeah, they do need blockchain and smart contracts and digital asset management, and NFTs are also appropriate. It's a team with very deep industry experience. It is revenue generating, which is quite uncommon for a lot of startups. They raised funds from a strategic partner and not a lot of funds, which is also a very good thing. The only the only factor that kind of I'm not very comfortable with is tokenomics, and I'm not convinced that that's the best token distribution, because if you look at what's going for the team and also fundraising, future fundraising, it's 55% of the total token distribution, and that to me is a little bit high. But at least I think, regardless of these maybe limitations, or maybe it's not a limitation, maybe it's probably a good thing, but I think it's a project that does allow you to have a second look. At least maybe this is something that you, as a creator or as a retail investor, will be interested in. Well, this is all for today. Thank you so much for being here. Thank you for joining me. And I will see you on the Fringe show again on Friday in a week's time at 2 p.m. Dubai time. Thank you for joining me. Bye-bye.